Hi everyone, welcome to the financials webinar for the FY23 Operating Support Grant Program. I'm Jackie Dubin, I'm the Grants Manager at ArtsFairfax. We're joined today by Sarah Bright of Bright Solutions. Sarah will be going over the financial section with me and will be able to give a lot more detail than us ArtsFairfax staff can, and she'll be able to answer your accounting questions. So before we get started, if you haven't yet, please right click on your video tile and rename yourself to display your name and organization. And also keep your microphone muted. We will have designated portions of this webinar to where you'll be able to unmute and ask questions. But while we're presenting, you can put your questions in the chat box. We'll get started with some introductions, and then I will go over the criteria and a quick, brief overview of the operating support grant. We will then get into the nitty-gritty of the financial section of the application, and we will pause 3 times for Q&A, and there will also be audience polls so that we can assess your needs and tailor this presentation to what we think you need to know to fill out this application. So, as I mentioned, I'm the grants manager at ArtsFairfax. We have Sarah today helping us present. Sarah, could you give a quick introduction, quick blurb about yourself?
Sure. I am, greetings everyone. I'm Sarah Bright, owner of the Bright Solutions. I have been working with ArtsFairfax for, oh golly, well over a decade. I'll just say it like that. And I am so enjoying being on this Zoom and seeing all of your names pop up and the wonderful organizations that you're including in your name blocks as well. It's very, very exciting. I have been working in the financial services, specifically in not-for-profit organizations, but in financial management for close to 20 years. I was working, my first career is as an artist. I'm a classically trained vocalist, so my undergraduate degree is in voice performance. And I started to work in the arts in the Washington, D.C. area in the mid-2000s and just kept going. So I started the Bright Solutions in 2008 in order to provide financial management services for a variety of arts and not-for-profit organizations, because many not-for-profit organizations needed this kind of help, but they didn't need it at a full-time, with a full-time CFO and at a full-time CFO price. And so I am working with a team of about 6 on my staff, and we have the most amazing clients and we love what we do. And there's very little in the not-for-profit fiscal cycle that we haven't encountered. And it's absolutely a passion project to continue to see arts and not-for-profit organizations thrive and to be able to meet their mission when we're helpful to get their financial management house in order, to be able to apply for grants and feel confident in those numbers, and to gain confidence from their constituency and also from the granting agency. So I am so grateful to ArtsFairfax to be here with you today. I'm looking forward to getting into what we're going to talk about, and I am hopeful that we may have a few opportunities if you have specific questions. But if there's something that really you want to take a deep dive, perhaps there could be something after the webinar where we're able to connect so that I can really make sure to try to answer well for you. So thank you so much.
Thank you, Sarah. I also want to give a chance to, I believe we have Lisa and Manuela from ArtsFairfax, if they want to unmute quickly and say hello before we get started.
Hi, everyone. Lisa Merriam here, Senior Director of Grants and Services. Thank you for joining us today. And I don't want to take up any time because Jackie and Sarah have a really informative session planned for you. And I will just be in the background in case any questions come up that I can help to answer. So thanks for being here.
Hi, everyone. This is Manuela. Thank you for being here and looking forward to hearing more about the webinar today.
I will move on. So the purpose of the operating support grant is to advance the arts in Fairfax County by supporting the goals and objectives of the county's arts organizations and to help them maintain and develop their programs, services, and facilities. I will introduce our first audience poll so that we can get to know everyone who has joined us today. 1 second. So 2 questions here. We're asking, what is your primary role in your organization? And also the category that best describes your arts organization. This will help us tailor today's presentation to your needs. The poll should have popped up on your screen. You can choose your answers and submit them.
I got the results instead of which.
You got the results?
Yeah,
Oh,
the actual poll.
Oh, great. Hold on 1 second. Thank you so much. Go ahead and answer the
Thank
poll.
you.
No wonder responses weren't coming in. Thank you so much for letting me know. I'm going to give it a couple more seconds. Okay, seems that most people have participated, so I'm going to end the poll and we can look at the results together. So looks like pretty even spread among the audience roles or the roles for your organization. So we have an even spread of chief administrators, treasurers, board members, development staff, and other. And there was an option to choose more than one position on that as well. And then we have a large number of performing arts organizations with us today, as well as multidisciplinary, followed by arts education, membership-based organizations, and visual arts. And I understand that some will choose more than one option there. So thank you so much. We're going to move to the next slide now. So this is the criteria that we list in our grant guidelines, as well as in the financial section of the application. The first bullet point applies to both the long form, that is for larger organizations, and the small form application for smaller organizations. And we're asking, is the applicant financially stable, and or does the application explain changes in finances due to the pandemic and steps being taken or planned to address needs and changes. This first criteria point will be addressed by the narrative question in the application. And we will go into detail on that question later on in this presentation. The following bullet points will apply only to the long form application. So those organizations with budgets over $50,000. And that is, does the applicant have a reasonable and clear future budget scenario? Excuse me. And does the applicant have a history of income from a variety of earned and unearned sources? So this is exactly what our panelists will be provided when they're reviewing your application. The required financial related documents are going to be embedded in different parts of the application. So This year, we decided to put the file uploads in the relevant section of the application. And this is when the reviewers are looking at your application, they will be able to see exactly where those documents relate to the questions, the narrative questions, multiple choice questions that are linked thematically. And this is also so that reviewers don't miss anything that you've uploaded and attached to your application. So in the eligibility section, which is at the very top of the application, this is where you will upload your IRS Determination Letter and Treasurer's Report or Audit. At the bottom of the applicant information section, this is where you will upload your 990. And in the financial section, this is not an upload, but you will enter your data directly into a table that is part of the financial section. I'm going to pass this on to Sarah. She will describe in more detail what you need to know about the required financial documents.
Absolutely. So I saw a question just pop up, and I think it's great as we're going along, the questions that you do have to put into the chat. I will do my best to try to weave around those and try to answer them in real time as we're all kind of going through. So for those of you that have done a lot of grant writing, requesting, you may be familiar with the term IRS Determination Letter. So that was what the question was. What is an IRS Determination Letter? I believe we may have a slide that will have a definition of that. But basically, when your organization is established, you apply to the IRS to be a not-for-profit, a charitable organization, and you get a designation. That's a 501c3 or a 501c something. And so that IRS determination letter is a letter from the IRS saying that you have been approved to be a not-for-profit organization. Another interaction that we have, that not-for-profit organizations have with the IRS, is in filing 990. And that may be another term that could be new to you or something that you're very much familiar with. It can be a little confusing because not-for-profit organizations do not typically pay taxes. We're tax exempt. That's one of the major benefits of being a not-for-profit organization. But that doesn't mean we don't have a tax return that we need to file. So the 990 is our informational tax return. So it's not actually saying that we need to pay tax. It's not actually filing any taxes, but it's an informational return. This is not something that is negotiable. This is a requirement. Every organization needs to do this, and we always want to do this so that we remain in compliance. In fact, organizations, if they don't file their 990, they can have their status revoked. They can be converted to a private foundation. So we just don't want to get into any of that mess. So everybody file their 990s and everything will be great. Within the 990, there are 3 different levels of 990s. There's a 990N, also called an e-postcard, a 990EZ, and a 990, which it's just so great. It doesn't have to have any other names, I guess, but it's the large full form 990. So how would you know which you would file? You base it off of how much revenue you've received in your fiscal year or your 12-month period. We'll talk about fiscal year in a few minutes. But for organizations that receive $50,000 or less, or earn $50,000 or less in a 12-month period, you can file the 990N. We'll talk a little bit about how you do that later on. And the 990EZ is the second level of the 990. That's gross receipts of $200,000 or less. So between that 51 and 200,000, you can file the EZ. You also have to have assets less than 500,000. So you have to own 500,000 or less in assets that you're in cash and whatever else we would consider as an asset, what you own as an organization. For organizations that own more than 500,000 and they have more than $200,000 coming in annually, they do need to file the full 990. So the 990N is an online e-postcard. You go to the IRS website, you create an account, you fill out your information. You should get some sort of confirmation saying that you sent it in. It used to be a 3-part process. To be honest, I haven't filed one in a couple years, but it is typically a 3-part few question process, and it's pretty easy peasy. The EZ is about a 4-page document. It does have a little more in terms of organizational and financial data. And then there's also attachments with the EZ, usually Schedule A, Schedule B, and then a supplemental Schedule O that you can fill out that can give footnoted information about anything that was truncated in your form. The full regular 990 can be about 30 to 40 pages, lots of schedules, lots of questions on policies, et cetera, et cetera. I don't really recommend doing the full 990 by hand. You could technically print it out and you could do it by hand. I think if your organization is at the place where you have that amount of revenue, that amount of assets, I would strongly suggest that you hire a CPA to put that together for you, because they have a software where they can load everything in, and then it will make sure that all the schedules tie throughout. I think that basically covers us for the 990s. So we can probably go to the next slide. And something else that's in the required documents are a treasurer's report or an audit. Now, this is a very wide scope, wide ask. And in general, anytime you have anything in accounting, you're going to have 3 different names for maybe the same document. So you'll have, someone will say a balance sheet, someone will say a statement of position, or you'll have an income statement, which could also be a statement of activity or a profit and loss. So they're trying, in this application, we're really trying to keep it pretty simple. An audit typically can refer to audited financial statements, which are prepared by a CPA firm. Even within this, and I don't want to digress too much, but even within this, a CPA firm can actually prepare 3 different levels of financial statements for you. An audit is the top level. It has the most internal controls and kind of following processes and procedures. Whereas there's reviewed financial statements, which are still certified. There's still financial statements that render an opinion and that are prepared by the CPA firm, but they don't necessarily take a deep dive into the internal controls. And then you have the compiled financial statements. But ArtsFairfax is saying that any organization that has a budget over $750K or more, please submit your audited financial statements. Another type of report would be a treasurer's report. So this could be something that would be prepared by we have a significant amount of chief executives on the call today. We also have treasurers, board members. So it could be someone on your board that's adept at financial statements. And the financial statements might be a very typical kind of 3-part statement: a balance sheet, income statement, and a cash flow statement. So that takes us through the treasurer's report or audit. And this is a terrific stopping point to kind of check in and see how everybody's doing, and are we all together? Anybody?
Yeah, so we have a lot of questions in the chat.
Okay.
I'm gonna start at the bottom and work my way up. So Chris asks, are the 990 forms something you have to get from the IRS, or is this something that they may have provided the organization as part of the standard process? Meant to say, is the 990 form something you have to get from the IRS website?
Yes, it is. Now, if you're going to do the 990N, you can just go to the IRS website and find the portal. I'm sure maybe even in I'll call it our show notes. I'm not sure what we might send out after or what we might have, but we can certainly, link up whatever the 990N website address is. For the 990EZ, all of the forms are on the IRS website. So the 990EZ, the Schedule A, Schedule O, Schedule B, those are all on the website. The full 990 is there as well. I would just say my strong recommendation is to please hook up with a CPA firm that can put together that 990 for you. And then you wouldn't have to necessarily dial out to the IRS website yourself.
Robin asked, does ArtsFairfax want a cash flow report as part of the treasurer's report? And while we are talking about that, Doug also wants to know if it's okay that his treasurer's report normally includes a balance sheet and a profit and loss statement.
I think that the balance sheet and the P&L are the most typical reports, probably the most helpful report. The cash flow statement is a mechanical statement, and it typically, if your organization is on accrual accounting, which we'll talk a little bit about the difference between accrual and cash later on, but if your organization is on accrual accounting, it can be helpful to have the cash flow statement because it walks through the accrual to the cash value. But I see there's a lot of consternation about the cash flow statement. I don't know that it's necessarily going to be something that would be helpful. And I will have to defer to, Lisa and Jackie on this, but my feeling is if you have a balance sheet and you have an income statement and that really represents your financial position well, that you wouldn't also have to have a statement of cash flows. However, if you're using a financial software, such as QuickBooks or something else, a statement of cash flows is readily available for you.
I believe that answers Janie's question. Cappy's usually uses QuickBooks software for the treasurer's report that includes cash flow, income, and balance as a comprehensive statement of activity. And that would be okay to submit. We will take your QuickBooks report. And we do actually have a poll about that coming up next, I think. Let's see, who should we answer next? Judy asked, our accountant is asked for an extension to file their 990. Can they use last year's return?
I would defer to Lisa and Jackie. My feeling is you want the most complete financial picture that you can have. So, I would suggest that you file that you upload the latest filed document, and then perhaps in your budget narrative, you would be able to say exactly that you do have a partially completed 990 and you anticipate filing by X date, but you're in an extension. So what do you think?
Yes, and also you can include the updated current one with your addendum so that we'll have the most up-to-date information on your organization by the time the panel reviews.
Thank you. I was going to say that. Lisa, while we have you, can you also discuss or answer Tracy's question? For those using a fiscal sponsor, are these items provided by the fiscal sponsor? So that's referring to the required documents.
Yes. So if you're applying with a fiscal sponsor, we have very detailed instructions about this for you in the application, that you're going to use the fiscal sponsor's 990 as well as their IRS Letter of Determination. And we have a whole process where we'll help you to get that from your fiscal sponsor and upload it into the application.
Thank you. Judy asked, what is an IRS determination letter?
And we did discuss that. So I think, I hope that was answered.
Did we
earlier.
cover that? Okay.
Yeah.
All right, we can then move on to how is a 501c3 different from a 501a?
So a 501, yeah. So 501A designation. This is I'm thinking that this is on the letter. I believe that it's still in the same classification. I would have to actually look at that. There's different designations of 501c, but I believe that on the determination letter, I think that it does say 501A, and so anything within that it kind of classifies. So there's 501c6 organizations which are also under the 501 designation, but they exist for membership basis. There's 501c3 that are, so we have different designations. So
yes, and we do not accept applications from organizations that are 501c4 or 501c6.
I'm just checking to see if I have any other pending questions. Yasmin asked, just to clarify, that unearned means grants. So unearned income would mean grants.
So unearned income doesn't necessarily mean grants. I think maybe as we go along, I'd like to get a little more clarification on to make sure that I answer that correctly. But unearned is also another name for deferred revenue. And typically what happens with that is we have earned revenue or we've received revenue, but it's not actually intended to be considered or classified or categorized until the next period. So the next fiscal year. So typically, so for example, it could be there was sponsorship received for a future program, and we received the funds before the end of a fiscal year, but it's for the next fiscal period. So we would consider it unearned because we haven't earned it yet. So maybe I'm not entirely answering that question, and maybe we can circle back to that a little later in one of the Q&As.
And our last question is, if we want to evaluate a clear and reasonable budget, shouldn't we look for a budget for past and future periods? So we are looking at the previously completed fiscal year to determine your budget levels and your eligibility, but we are asking for information about the current and future fiscal year in the financials table. But the reason we're focusing so much on the previously completed year is we are assessing the health of our organizations now 2 years into the pandemic. We want to go off of your recent activity as opposed to your pre-pandemic activity. I hope that answers your question. Okay, I'm going to go back to the presentation now. Thank you so much.
So I mentioned earlier that there are two different methods of accounting. Perhaps, Jackie, you could go ahead and pop up that poll while I'm talking about them. We're going to ask a poll about if your organization is on cash or accrual. Accrual accounting, and honestly, for new organizations, you may not know, or you do actually have to select this when you're you're filling out the 990 for the easy and for the full 990. Accrual accounting is the preferred accounting method for not-for-profit organizations, and it means that you recognize revenue and expense when incurred, not necessarily when a check is written or cash is received. Cash accounting is basically recognizing items as when they're in your bank account. So it's more of a responsive accounting versus a proactive accounting method. So for example, if you get an award letter, let's say you get your award letter from ArtsFairfax, let's say it's in August, and even though perhaps the actual cash won't hit your bank account for another 3 months or so, and of course I'm saying this not really being aware of exactly where the fiscal grant cycle is, I'm just using made up months here. But based on accrual accounting, you actually should record that revenue as received in August as the date of the award letter. Same thing if you have a contractor that, let's say you have an artist that you're hiring to play with for one of your, for a September concert, and you have the concert and maybe they haven't even sent you the invoice to be paid yet, but really when having that invoice, you really should record that expense in September, even if you don't pay them until October, which of course we all know is not really true. Our artists want to be paid right away as quickly as possible, so we don't really so we typically have more of a cash basis with them. The other question, it looks like we're also just curious about if you have a financial software, QuickBooks Online, any other type of software, or you're not using an accounting software. A lot of times organizations, as they're evolving, they're using Excel spreadsheets or other kinds of tabulation softwares. Some of that will be helpful. So choice number one I'm not sure, is choice one cash or is choice two?
I apologize. I'm going to end the poll, fix that, and then I'm going to relaunch it. Sorry about that, guys.
Okay.
One moment, please.
Or Jackie, you can just tell us. It was about split
that's okay.
cash.
I can just relaunch it. It was really fast to fix it. Sorry about that. One more second. Go ahead and answer it didn't work. Okay, choice one is cash, choice two is accrual. I apologize.
Okay, choice one is cash, choice two is accrual. And this is an important thing to know. I mean, not only for your internal accounting procedures, but also as you're applying for these grants and things like that. Go ahead and use, for the desktop version of QuickBooks, go ahead and use QuickBooks Online. I should have requested that was just QuickBooks. What I'm trying to do is I'm trying to figure out as we go along how I should be explaining some of this.
Okay, I'm going to end the poll and share the results.
All right. So we are 35% cash, 65% accrual, and we have about 60% in QuickBooks and a QuickBooks product. We have 35% in another type of software, and then not using an accounting software, so Microsoft Excel and things like that, is only 6%. I'm actually surprised with those numbers, to be honest. I think that really shows how robust some of these accounting softwares have become and how accessible that they are. And so I think that's great. Good. All right. Well, I think let's go ahead and move along. So we talked before about fiscal year. Again, this is important for your application. Fiscal year is a 12-month period that your organization elects when you initially register with the IRS. Some organizations use the calendar year, so a calendar fiscal, January through December. Other organizations use mid-year, July through June. Others select other periods. So if we can go ahead and put up that poll, we're going to do the same thing where we're going to ask what your fiscal year is. Sometimes, organizations will select more of like an academic year, September 1 through August 31. Honestly, a lot of times this can be driven by a specific funder. For organizations that get some government funding, they will choose October 1 through September 30th because that's how they're reporting the use of their funds. So there's no right or wrong fiscal year. It's just, and I will say, you can change your fiscal year too. You can, if you decide later on that you want to be, if there's a compelling reason to be on a different fiscal year, you can change it by filing a short year and then moving forward with your filings at the desired year. This will be particularly important to have as you're sorting through the budget table, because you'll really need to be clear, because everyone is on different fiscal years. We'll see in the headings in a moment that you really need to be clear on what was your last year, what is your current year, and what is your projected year.
Okay, I'm going to end the poll now.
Okay, so we see that a little over half of us are on what I seem to consider a very common not-for-profit fiscal cycle, which is the mid-year. About 25% are on what I would call an academic fiscal, which I think makes a lot of sense. I know that we had some arts education, multidisciplinary organizations, and then about 17% are on the January 1 through December 31. Okay, great. So moving on. For the operating support budget grant, or the operating support grant program, the budget size is determined by the total expenses. This is a very, very common question, and actually always check this with the funder that you're requesting funds of, because some funders consider total budget to be revenue, some expense. This one is total expense from your most recently completed year. Lisa is reminding us that the FY23 operating support application, you will use your most recently completed fiscal year financials to calculate the 15% of your expenses. It's really, really important that you do not include in-kind expenses in the budget level calculation. There will be a space on the budget table for you to put your in-kind expenses. We absolutely want to honor the gifts and the service and the talent that has been helping to sustain your organization, but we can't include the value of that to be something that you expensed when you technically did not. So looks like we have another poll here, probably to check on your budget size.
Responses are still coming in. Give it a second.
We have so much creativity on this call. We should have songs and maybe someone wants to recite a poem.
Okay, that hit about everyone. I'm going to end the poll now.
All right, and so the results are about 41% of us are in the 50K and under, 18% 50 and 100, 32% 100 to 250, and we have almost 10% at the 500 and over. Okay, so Jackie, I think we are ready. Well, I guess, yeah, should we go ahead and do a check-in here and then
Yes.
before we move on in?
So John asks, please define service with respect to in-kind donations.
So in-kind donation of service, if there is someone that is providing support to your organization that you would normally need to pay, but you're not paying them, you can quantify their time as in kind. And it's typically something that you do in agreement and in tandem with that person or group. So for example, a few years ago, there's one of the choruses in DC. We began to recognize their volunteer singers, because actually they had a few paid ringers, but the majority of their singers are volunteers. And based on the guidance, we were able to calculate annually, if we were to pay all of those volunteer folks at rehearsal time and at performance time, what would that amount be? And that became an in-kind contribution from those singers. And so it is considered an in-kind expense and an in-kind revenue for the organization.
So we had some questions about which fiscal year to use to determine your budget level. Sarah, could you go into more detail about if your fiscal year ends in this month, which fiscal year you should be using for this application?
I absolutely, and I think that will make sense when we're actually looking at the table.
Sure.
I can go through that part of it. That is a good question, though. Do we want to, when they're calculating the 15%, or when we're determining the expense level, is it for the prior completed fiscal, or is it the current budget? I'm actually not sure what you all want.
Previously completed fiscal year.
Previously completed is what you're using. Okay. But Judy, I will get back into, if your year ended here, this is where your prior, and hopefully that will gain a little clarity at that point. Okay. John's asking about not volunteers. Absolutely. So if you have someone that is doing computer services for you, or they are, building a platform for your, conductor to be able to, run rehearsals or whatever, you absolutely can quantify that time. I suggest that you work with that individual on what you would be paying them. And then you would be able to create an entry for in-kind based on what you would be paying them. And you can research market rates, or if you have someone else that you're paying to do that service, but then this time you're not going to be paying. That absolutely. So yes, so volunteers. Volunteers is a really wide category. That's another one of those words that kind of means something different to everybody. So anyone that is volunteering their time, the only thing that I would be careful about is your board members. Your board members are basically, they're in an engagement with the organization. And so I wouldn't necessarily take your board members and the time that they're, serving on your board as being considered, or if they're in a management capacity with your organization, I wouldn't necessarily consider that in-kind contribution.
And I'm going to answer the last questions here before we move on, because we do only have 15 minutes left in our scheduled time, so we will go a little bit over an hour today. So we understand that your last completed fiscal year might look different than your year that you are currently budgeting for. again, we are trying to assess the health of our organizations and awarding organizations based on their activity that has been recently completed. There will be an addendum and additional information that we'll request after the deadline has passed. And so once we're able to look at all of our applicants' submitted financials, we can then reassess and see what we'll be doing later on. But for right now, yes, you are using your previously completed fiscal year. Sorry, I'm reading a question. Judy says this year is an anomaly for us, raising funds for our 50th anniversary concert in April. Expenses will be greater than usual too, so FY22 will look very different than other years. You can indeed address that in the narrative. We will go in more detail into the narrative once we bring up the application. Janie asked, our last fiscal year revenues were down because of COVID, but staff work requirements remain the same, but salaries were cut. How do we reflect this going forward? Sarah, do you have any insight there?
This is on the, how do we reflect it? Our last fiscal year revenues were down because of COVID, but staff work requirements remain the same, but salaries were cut. How do we reflect this going forward? We're going to have, in the narrative, you're going to have an opportunity to discuss variances. We'll kind of show you in a moment how to be able to show that. I'm just going to say it's going to be inevitable considering what has happened over the past few years with our particularly performing arts organizations, but all of our organizations. Everything has been kind of all over the place. In addition, we've had federal funds and we've had other things that have come in. So our baseline of operations, our revenue, our expense, everything has had some fluctuation. So we're just going to expect to see some variances and changes from year to year as you're filling this out. And that being said, you can really, we'll get into this in a minute, but you can really help the panelists that are reviewing this by being as explicit as possible with why that change happened. We're expecting that there's going to be a change from year to year, but we really need you to be explicit to explain exactly why.
I'm going to go ahead and move forward. That last comment that came in, we will be able to address in better detail with the next section. So I'm going to go ahead and introduce the application. So to find the application, you will visit artsfairfax.submittable.com/submit. This is linked on our website. We are also providing an Excel worksheet version of the financials table. This is not going to be used in your final submission. This is just a practice worksheet that you are able to distribute around members of your organization to gather numbers from here and there, whatever you might need it for. It's also a little bit easier to read. As you can see, this is a preview. I'm going to bring up the actual application in just a moment. The Submittable web application does not support a lot of formatting, so we're providing a color-coded, easier to read version for you to get all of your numbers sorted out on before you enter it into the final application. Really appreciate the extra effort here. This is to help our reviewers understand your organization and to create a standard that all organizations will be evaluated on. They will all look the same. So with that, I'm going to switch my window and bring up the application here.
So in the application, Jackie has really laid this out so well with this webinar today, because you're going to see a lot of familiar themes to what we've already talked through. So congratulations, you've already completed part of the application. So you're going to see these questions that we've worked through today, some of these multiple choice short answer questions. And as Jackie mentioned, our recommended suggestion for how you work through this is to go ahead and get that Excel worksheet and plug in your numbers there. Get that in good standing. and then go back to fill in the table in Submittable. That doesn't have to be the way that you do it, but we think that following that logic, it's going to make it so that this is a plug and chug versus a figuring out with your organization how you have things categorized and then how you're going to categorize it into this format. So in the financials table, you're going to see the data organized typically as a profit and loss would have it. You'll have your revenue, you'll have, and we have it here as earned revenue, we have contributed revenue below it, and then under that we have our expenses for the organization. Now, and for the expenses, we actually start with personnel and then we go into operational expenses. You'll see in a lot of the different categories, so this is, still in this first column, I'm going to call these categories. Those are our revenue and expenses. You'll also see that many times there's an other. So you may have a really important area that you want to highlight that doesn't fit in. Maybe you have in contributed, you have something that's really special, whatever it is that you really want to make sure that you outline, and it's something that's very important. You can use that in the other. It's imperative when you get to the final column, the notes column, that you tell us what that other is. So you'll label it there. So I think in working with organizations on these types of reports, some of the most challenging thing, and sometimes the question that I'll get a lot is, so here's what my organizational financial statements look like. Where do I put this stuff in here? And I wish I could go through with every single one of you and help you kind of create that bridge. But I think that ArtsFairfax has done a wonderful job of really clearly labeling the categories so that I think 90% of this should really resonate with what your organization is doing.
Pull up the Excel version because I do think it is easier to read, and we'll be able to see more of the chart on one screen as well.
Okay, great. All right, so now we went through and talked about fiscal year. Everybody has a different fiscal year. So because of that, we have to set up the columns. So column B, column C, and column D in this worksheet. We have to set them up with boilerplate language. We can't say, fiscal year ending 12/31 because that was only, I think, 17% of you. So let's kind of talk this through. In general, we're looking back, we're staying present, and we're looking forward. That's basically our three columns. So in our most recently completed fiscal year, if you're a June 30th fiscal year, your numbers that you're putting in are going to be your June 30, 2021 numbers. If you are a 12/31 fiscal year, so your fiscal year ended December 31st, you are going to be putting in December 31st, 2021 numbers. So that's your last calendar year. If you are I think we had academic fiscal. So if you are a August 31, you will be putting in August 31 of 2021 numbers. Those will be your most recently completed fiscal year. Your current fiscal year approved budget. Notice that this is not actuals. This is not what have you done so far this year. This is, ideally, before you got into this fiscal year, you made a plan. And in that plan, you had a general idea of what you were going to earn, what you were going to receive in contributions, and what you were going to spend. We want to see that plan. What is your plan for the current fiscal year that you're in? Again, if you're a June 30th fiscal close, your budget in column C is going to be your July 1 of 2021 through June 30th of 2022. If you're a calendar fiscal, it's going to be your budget plan from January 1 through December 31 of 2022. Next fiscal year is going to be the next fiscal year for your organization again. So if you're a June 30th, it's going to be July 1 of 2022 through June 30th of 2023. So you do need to project forward. You do need to budget ahead. The notes column is very important for, as we talked about, outlining the lines that are other, identifying what those are. Some organizations can really use this notes in a very keen way to actually create a footnote logic. So it could be footnote 1, footnote 2. You'll later see that there's a budget narrative, and you can then, in your budget narrative, you could actually put footnote 1, and then you can explain. So you are going to have variances. Don't panic when you see 10,000 in one column and the next column is 5,000. Don't panic. We're expecting that. But what we really want is for you to explain the change. It is so much better for you to explain the change than for the grant panelists to say, I wonder what happened. It's just better to explain the change for positive and for negative, because we have seen this through the pandemic. There's been, in some cases, more funding. And so if you have a change, explain what that is. Help us to go ahead and connect the dots there. So notice that on your revenue and expense, you will have breaking out for in-kind, debt retirement, and capital expenditures. So those will not, they'll be included so you can tie to your audit or you can tie to your treasurer's report, but they'll also be segmenting so that they won't be included in your calculation for your baseline expenditures. Now, there is a thing to do on this that's a little bit more complicated than some of the other parts of this form, and that is your accumulated deficit or surplus. For that one, you're going to need to manually calculate that. And what you'll need to do is you'll need to look at what your unrestricted amount of net assets was. You can pull this from your 990 going in to your most recently completed fiscal year. Then you'll need to look at what row 70 says, your annual surplus or deficit, and you'll need to put those two numbers together. And that will be your accumulated surplus and deficit. It's basically the roll forward. What happened before the most recently completed year, what happened, and then you're adding on or reducing by the most recently completed fiscal year, whether it was a surplus or a deficit. So I know that we wanted to talk about the budget narrative as well. I think I did kind of dive into that a little bit. The next after, and I see there's a lot of questions specifically about the classification. Maybe we can get back to that in just a minute. So you can see here that you are requested to put any sort of substantial variances, plus or minus 20%, between your previous year's budget, previous year what actually occurred, and your current fiscal year budget. So that really is your area. Not only can you, if you want to do the footnote logic, but you also can kind of really get into the changes. So this is a kind of an idea of what different things you can do. You can actually, go ahead and use this as your opportunity. Explain how these funds really are going to help you. How are they really going to help your organization in a very practical way to be able to do what it is that you need to do? It's also important to put, if you have a pending application through Virginia Commission for the Arts, we would like to know that information as well. And we have a no fixed word count, but the suggested range is 200 to 300. So I'm not sure, Jackie, where you'd like to go from here. I see maybe this is, we'll talk about the tips and tricks and then kind of dive back into the specific questions.
Yeah. Yeah, I'm just going to wrap this up because we have a planned Q&A right after this. So some advice for filling out the submittable table. It can be a little bit slow to update. So this is why we recommend starting in the Excel worksheet and then moving to the submittable application table. Make sure you take your time. You can always save and return to the application later. I also think that submittable applications auto save, but I recommend, keeping on top of it, saving it and coming back to it later when you need to. And to ensure that the last filled cell is recognized in the sum total at the bottom of that section, you can just, let me pull up the application itself, it'll be a little easier. Once you've entered in a number here, it's going to look really slow here because I have a lot of programs running. I promise you it will not be this slow. Make sure that you click a different cell afterwards because it will take 5 seconds for the number to appear in the sum total. That is a very important tip to make sure that your table works correctly. We also have enabled the submittable collaboration tool. In our information session last week, someone asked, can we work simultaneously? You can indeed work simultaneously with the collaboration tool in Submittable. I am going to show you right now where to enable that. Right at the top of the application, there is a link to invite collaborators. You can invite other people to create accounts and come and work on this application. Just make sure that you designate one account, your organization's submittable account, the one that you normally use to apply for our grants, as the submission owner. You can refer back to this presentation. There is a link that has a little video and an article that will give more detail on how this feature works. And this is just a screenshot of what I just showed you. So, all right, we can get ready for our Q&A. I'm going to I'm going to start with this question. Last week, we discussed that there is a minimum award of $1,000, but there may or may not be a minimum operating budget requirement. So there is a minimum operating budget requirement. We met with our grants committee and decided to put in place a minimum operating budget of $10,000. If this affects your eligibility for the organization, please send me an email as soon as possible. We can talk about your options and your future eligibility. This is, again, we're assessing the health of our organizations from their pandemic budgets. And we understand that you may not be eligible this year if your pandemic budget changed that dramatically. We are interested in we will have other funding opportunities later this year where you will be able to request a lot more money than you would have gotten with the operating support application. And there is no guarantee that you would get the minimum award. It is just the minimum possible award, but we aren't funding anything lower than that. So the new clarified minimum budget is $10,000. You need to have $10,000 of expenses in order to qualify this year for the operating support application. Like I said, if that affects your eligibility, please send me an email. We can talk about it over the phone. Janie says that our gala at the County Center has a separate detailed budget. How much detail do you want? At a high level, it's in QuickBooks, but can also be broken out, which we usually don't do in detail. So in the financials table, we're not looking for a lot of detail. We do want you to round numbers up. Sarah, do you have any insight here?
I think that if the gala is part of your general operating, meaning that it should be part, it would be reported as revenue commingled with your other operating and other revenue funds in your 990. So I do not believe that you would need to separate anything out. If you have QuickBooks, you probably already have it in there as actuals. I'm wondering if maybe you had an operating budget that you entered sans the gala, and then you had a gala budget. I think if that's the case, I still would recommend that you would enter your budget as a combined with everything together, because that would give you, a more robust version of actually what is happening within your organization. QuickBooks, sometimes it actually doesn't allow us to run two budgets and then overlay them together. So usually you have to kind of say, okay, this is the operating budget that may not include this one funder budget or this one programmatic budget, and then you'd have a separate one for that. So I would actually suggest you put them together. I hope that answered your question.
We had a question about the short form application. So I'm going to work on bringing up that short form application. If my memory serves correctly, the financial section is relatively the same from application to application, because we worked on streamlining the application from last year. So there are overall fewer questions in the short form, but I believe the financial section is the same. The narrative question might have slightly different wording, but essentially it's asking for the same information because it refers back to that first criteria point. And that criteria point is the same for both long form and short form. So I'm going to take one moment to bring up the other application, and just give me 1 second. I'm going to see if Sarah can answer another question while.
Yes, absolutely. So hi, Robin. I see Robin from Traveling Players is asking a question about explain again where to enter the starting accumulated surplus or deficit. This is the previous year's results, correct? So actually, you aren't actually going to enter the prior year's
okay.
Yeah, you're actually going to put that on your Excel spreadsheet or wherever you're using to calculate it, and then you're going to put that, you're going to calculate it manually. So you'll look at your 990 from the prior year, and you'll have your accumulated, it's basically going to be your unrestricted net assets number, and you'll have that number. And then in your prior completed year, you'll have the surplus or deficit, and you'll be able to put those two numbers together. And I saw somebody else say that it is confusing. I think that it's basically, what was the accumulated number that you came into, that you had as you started the year, and then what happened in that 12 months. The good thing is, in that 12 months, once you fill out the form, you're going to have your 12-month surplus or deficit already calculated for you. So it'll just be taking that original number, calculating it against that 12-month number, and then you'll have your bottom line number for your accumulated.
Okay, I can now address the short form application. So I'm going to change my screen. And I can confirm that the financial section of the short form application is the same as the long form, except that we are looking at fewer criteria points. So just that first criteria bullet, is the applicant financially stable? Does the application explain changes? That is the same between both applications. And the table is the same, as well as the narrative question is the same. You're also still asked the same questions up here about your method of accounting and your fiscal year. Okay, let me bring the table up and let's see. We have a question about the accumulated surplus and deficit. What is the reason for this to be included? Why are we looking at surplus and deficit?
You know, we're going to be able to see it regardless on the 990 and in your balance sheet. So your balance sheet is what you own, your assets, your liabilities, what you owe, and then you have your net assets, which is balance of those two, what you own versus what you owe. And in your, that's also called an equity section. It's down at the bottom of the statement of positions. So we're going to be able to see this. That can be, you know, so it's basically just, and that's actually another place that you can reference for actually looking at your accumulated surplus and deficit. It's just that you'll have that if your financial statements are for the previous fiscal year, you will have that in your net assets section, your equity section. You just wouldn't necessarily have that for the budget or for the next fiscal year. So in columns B and column C on this application, you wouldn't necessarily have that next year. So you'll need to kind of manually calculate that. But it basically, the reason for it is it does show financial health of the organization. You know, if you're just where your organization is. So it is an important number to have overall.
Janelle asked, and I think I might need Lisa to answer this question. What does ArtsFairfax recommend for organizations whose next fiscal year budget will not be established by the grant deadline? TEFRA has fundraisers that take place after May and July, and that will significantly impact the direction and approach of their next year's budget. And we'll make this our final question before I go into reminders. Lisa, do you have any insight here?
Yes, sure. I would say to use the narrative, the budget narrative, financials narrative to explain that. And you also have the option of the addendum all the way up until the panel meets in May. So if there's a major impact to your organization of whether it's a fundraiser or a grant that you receive, you can use that addendum to update the panel on that additional information anytime before the panel meeting. And if you don't have the information before that time, then use the narrative to explain what you're expecting.
So thank you so much, Sarah, for your hard work today. And just you said that you would be available for questions. Would you prefer that the questions come through me and I can forward them on to you for clarification?
Yeah, I think the best thing to do would probably be to, you're welcome to email me, but please make sure to CC someone at ArtsFairfax, so Jackie, because I might give the correct accounting answer, but I may not give specifically the answer that is in alignment with what they want in the grant application. So I want for them to have an opportunity to correct me so that I do not lead you astray in your grant application. So happy to, you know, answer questions as I'm able, and you know, just wishing you all absolutely the best in your application process.
And before you all leave, a couple reminders. I'll first mention that our learning cohort application closes next week on March 15th. And the highlighted dates here refer specifically to the current open operating support grant. So that deadline is April 14th. The applications that we receive will be reviewed on May 11th, 12th, and 13th. And the announcements will come out in August. I will send out this presentation as soon as we're done. There are some definitions available here, and I would also like to get the recording up on YouTube, hopefully by the end of the day, if not today, tomorrow. So please look out for that. That will be posted to our website, and I can also email everyone who registered that the link to view this webinar. I believe that is everything we have planned. Thank you so much, everyone, for coming. We're not going to answer any more questions right now, but you can go ahead and send them to me as an email. If you have any questions about your eligibility, also reach out to me by email. We can talk about it over the phone. Thank you so much. And I hope everyone has a great rest of the day.